working with the new system because we have good friends here on the station with us on 915 Talk.
Yes, we do.
Yeah, they've been on, 4 times before? 3 times? How many times?
4 or 5.
4 or 5.
Mhm,
Okay,
so.
yeah. And they're with Truvize Financial Planning, and we talk all kinds of things, Mac Daddy. But Mac Daddy, something happened to you in your car. You had a little problem, and you didn't want to deal with insurance.
Oh yes, definitely.
Yeah, I don't know if you want to bring this up on live radio, but
sure, why not?
yeah. But part of financial planning is understanding your insurance.
Yeah.
So we're going to be talking about all things insurance today. And this is where I am careful to say that nothing in this broadcast is in any way to be construed as financial or legal advice, and is in no way to replace the advice of a professional who knows the specifics of your situation. But I look forward to diving into this conversation because I think there are a lot of really big decisions we make, and we don't realize we're making those decisions, and they affect us over the long term. So insurance, of course, is one of our biggest, I know in my family, one of our biggest budget line items, and just really understanding how we're making decisions, making the best decisions. And also, if you're running a business, really understanding the best insurance situation. So I really want to jump into this conversation. Really great to have Truvize Financial Planning with us. So without further ado, let's give a very warm Borderland welcome to Jonathan and Drew. Jonathan and Drew, welcome back to 915 Talk.
Thanks for having us.
Yeah, this is fun, and it's like I told you when you came in today, it's a big day for the station. We're running on our new system, and hopefully, like I said, it will serve us for years to come.
That's awesome.
But I'm going to try to fit all these things together. The automation system was a budget line item that it will affect us as the station for years to come. I think we got a really, really good system, a really good situation. It's the result of a lot of counsel from a lot of people who understand radio better than I do. And I think we are in a good situation. And it's the same with insurance.
Yeah, sure.
You go out there, you try to be informed, you try to make that right decision, but man, I can't think of anything else that costs my family more every month than insurance.
Yeah, sure.
Maybe mortgage is higher. But when it comes to business, what are some of the things that you see with business owners when it comes to making insurance decisions?
Go ahead, Drew.
Yeah, so I mean, there's basically two folds to businesses and insurance. They have, to deal with, business owners have to deal with insurance for their personal needs and the needs of their employees. And so those things would, those types of insurance would be health insurance and maybe group benefits like group life insurance, group disability. But then also there's insurance that is necessary for a business to maintain to protect the business from certain things happening. So the most common one would be general liability insurance, and
which we know well.
We do know that well from our experience in the past.
Okay. Any stories about that? It feels like Jonathan wants to tell us a story.
Well, as we've talked about before, that we used to own Glide scooters. So when you talk about liability, riding electric scooters that are rented on an app downtown.
Right. So Glide scooters were these scooters that were just scattered around downtown El Paso. You could walk up with your phone and rent one.
Yep.
Right. Yeah.
Yep.
Yeah. Sorry. We're still figuring this out. So someone can just jump on that scooter theoretically and drive the scooter straight into a building.
Yes.
Sure. Yes.
And they did.
Absolutely.
And they did.
Sometimes, we had the beefiest scooters, and they would come back, and you would just be like, "What happened?" Because it's in two pieces. So
wow.
But you have to carry general liability insurance, and depending upon what business you're in and the amount of risk that you're taking. It can be, for Glide, it was the largest line item we had by far.
I can imagine.
And it can be very expensive, but it's also very necessary to protect yourself from accidents happening. It's a general liability policy, so
Right.
it covers everything from accidents to maybe somebody getting hurt on your properties or anything like that, and it's important to have that. So that's one of the biggest ones that you'll see for businesses.
And I think going back to what you were saying earlier about it being the largest line item, for the business owner, like Drew said, yes, on the personal side, when we're working with business owners, we have to almost, it's like you're working with two different people. One of them is the personal owner of XYZ business, and the other one is the actual operator of XYZ business and XYZ business as its own entity. So going back to the personal side, yes, it usually is, if you add up your health, home, auto, life, disability, whatever, I mean, there's insurance all over the place for all kinds of things.
Yeah.
It usually ends up being one of the, if not the highest line items on your budget. So making the right decisions on how much you should have. Am I overpaying? Should I shop this? Do I have the right deductibles? Do I have the right coverage? Is a huge part of financial planning, period. Not just for us, but for anyone. Even if you're not working with a financial planner, this is something you should look at, hopefully on an annual basis.
Absolutely.
We can't tell you how many times we've seen people, and then ourselves, that man, we haven't shopped an auto policy, for instance, or an auto home bundle policy for years. And you go out and shop, and you could save huge amounts, 40, 50+%, just going to a different company. So it is a huge piece of planning. It's a huge piece of an overall kind of overarching look at your finances that sometimes people just, oh yeah, that sounds good, sign here and move on and never look at it again.
Yeah, well, I think what I'm hearing you say is just the importance of shopping around.
Yes.
Not just accepting the first quote.
No.
And how often would you recommend or just to at least think about shopping around on really any insurance policy?
I would say it depends on the type of insurance that you're dealing with. But if you're dealing with like your property and casualty insurance, which is going to be auto, personal general liability, and then like homeowners insurance, you should be shopping those every year. And so when that renewal email comes in or letter comes in, you should take that opportunity just to do a quick search.
Not to auto renew.
Yeah.
But to pause for a moment.
And sometimes there's no issues, but I'll tell you what, in the homeowners insurance space, it's a bit of a mess right now because of all of the claims that have happened across the country because some of the natural disasters we've had. And there are some carriers that are exiting certain markets. And so I had one client, this is crazy, normal sized house, premiums went on her homeowner's policy from like $2,000 a year to like $7,500 a year. And that's because they didn't want her business anymore.
Yes.
Yeah.
But you go a few months of not catching that, and that's hundreds of dollars you're overpaying. So you got to keep your eye on those things. And it's good just annually to shop that, make sure that it's competitive, and to also check your limits. Your home's going to become higher in value every year. You want to make sure that the limits on that match up what you
will cover.
Yeah, your house. Because you don't do that for 10 years, you're probably paying too much, and then something happens, and maybe only 70% of your home's covered.
Right.
So. Similar situation. I had a client that they're not an ongoing client. It was a one-time plan where they came in, had some questions, and when we were reviewing their mortgage statement, the one big thing about homeowners insurance is when you still have a mortgage, usually it comes out as one bundle. Right, you have your principal, your interest, and your insurance all coming out in one payment. And when you broke it down and looked at it, I was asking him, "Wait a second, you're paying how much on when it comes to your property insurance?" And he just kind of thought, I don't know, that's just how much it is. And it ended up, yes, he went back and he saved almost $5,000 a year.
Oh my gosh.
Just from saying, switch the policy. Because like Drew said, sometimes they don't want the business anymore. Hike it up so crazy that if you want to leave. But if you want to stay and keep paying, go for it.
Yeah. Well, they hope the homeowner will catch the hint, but sometimes they don't.
Yes. Sometimes they don't. And so, and it can be the same thing with auto insurance too. You just want to go through and you want to shop it, but make sure everything's up to date. And
our for my wife and I, our home insurance is really high because of the type of roof we have. We did not know that. We did not expect that when we bought the house. And I'll tell you what, we watch it like a hawk. and what's interesting about it is I think for a lot of people, the pain point is you don't want to spend an hour on the phone
Right.
Yeah.
waiting to get through to the agent, being given the runaround, this and that. But when you do the math,
it's worth the time.
It's absolutely I don't know of very many hours where I'm making $800 an hour.
That's right.
You know?
Yes. Yes. When viewed that way, that's exactly right. And nowadays, you don't have to get on the phone. You can go online and you can go through. I mean, there's I can name a few, but there's aggregators that you just put your info in. They shop it all for you, and they'll come back with some of the best offers.
Right.
You don't have to go and get on the phone and call a bunch of different places and try to get quotes.
Yeah.
It can be done in a 10, 20-minute thing if you have all your info, and it's worth it.
Yeah,
Absolutely.
well, I think what I found in speaking to this absolutely is it's very often interesting to find an insurance broker who works with multiple companies.
Yeah,
and then they can shop for you and come back and say, here's option A, B, and C, and you can choose the cheapest one.
Yeah. Well, I was going to say, that's there, and those do exist. We know them here in town, and it's nice to get a healthy balance of some of those other smaller insurance companies that may be independent, and then some of the bigger ones that you see all over the news.
Yeah.
Just to get a well-rounded quote.
Anytime this is another thing. Anytime I'm watching football. All the ads are insurance.
Yes,
and I'm like, talk about big business.
Yes,
and they're making all kinds of money. So, I mean, that actually is one of the reasons why I am careful to always shop.
Insurance, drugs, and food.
Exactly.
Yeah, those are the ads.
Yeah.
And you always notice, like, when you're trying to go on a diet or not eat bad, every other commercial's like Taco Bell nachos.
It's true. You're just like, oh my god.
Yeah, and
That's
then,
so true.
Yeah, and then the medicine to help you if you've eaten.
That's
too
right.
many
Yeah, that's
ounces.
all. Yes,
They're all interconnected.
that's exactly right.
Wait a
One
second.
leads
I think
to
we
the other.
figured this
That's
out.
exactly right.
Okay, so you're talking about the business owner as an individual. So I think you're saying just like home, life, auto, those types of insurance.
Yeah, starting there, when it comes to financial planning, we're always starting from the foundation of, in the case that something happens, like, I don't know, a government shutdown, and you don't get a check.
Just theoretically.
Do you have enough emergency fund to handle something like that?
Right.
If something breaks, do you have enough money to handle it?
Sure.
Right, we kind of start there. We're trying then to limit or eliminate high interest debt and limit low interest debt. And then on the insurance side is that next level of, if something really, you have a huge breakage, then one big thing that we'll focus on is your deductibles. So it does make sense. Part of the emergency fund should be that you should have enough money to cover your deductibles, so that if you do get an auto accident and your deductible's $1,000, you have that $1,000 to pay to help. Or, like homeowners insurance deductibles are really something that you got to think about, especially as the home gets more and more expensive.
Sure.
1% of a $500,000 house is a lot of money.
Yeah.
So it's all of those things are intertwined of where we'd start with a business owner is, let's look at your personal side, make sure all that's done. And there's a lot of factors to that too, right? So we talked a little bit about property and casualty. Another one would be health insurance, which is a huge part of the conversation right now, around how expensive it is for everyone.
Yeah.
People who work a regular W-2 job, a lot of times they'll have a pretty good amount of their premium subsidized by the employer, especially if it's a larger employer. But for a business owner, for a contract employee, that has become, it's no question that is probably the highest line item, and it's probably one of the highest stressors is, if I'm going to go open my own business, how do I handle health insurance for me and my family?
Yeah.
And it's a difficult answer, and I think it depends on every person's specific situation.
Marry someone who has a job with benefits.
I mean, that is
That's a
honestly,
good one.
you kind of were talking to Jonathan and I there a little bit for a while, you know?
Yes, our wives. So my wife was a nurse. She worked in a hospital. You can get health insurance through her, and then it was. But yeah, one example would be if you go to the marketplace. Let's say it's you and two kids, your wife, two kids. You go to the marketplace, and there's no subsidies for whatever reason, your income, whatever. And right now you're seeing $1,700, $1,800 a month payments with $10,000, $15,000, $18,000 deductibles.
Yeah.
I mean, it's insanity, right?
Yeah.
So it's figuring out what makes the most sense for my family in our current situation. Do we have enough money to cover if an arm breaks and we got to go to the hospital and X, Y.
Right.
You have to look at those intricacies, and it's not just a black and white answer most times.
Yeah.
And it's not an easy answer, I think, either. In the health insurance space for self-employed people, it is probably one of your greatest challenges, and there's not really a solution that is going to sit well with you. It's just a cost that, based on your situation, you have to figure out how to handle, and whether that's you absorb it or we figure something else out. But it's just a difficult thing. So
you're both with Truvize, and you're looking through all of their financial situation. How big is insurance in that conversation compared to everything else?
Yeah, sure. It's huge. It's a whole section of their plan. So we have a whole section of the plan that's just dedicated to insurance planning by itself.
Okay.
Because that can derail everything else.
Uh-huh.
That when we start again from the foundation, if you get a crack in the foundation, the rest of the house is going to have issues. And so you have to start there with emergency funds, with debt, with insurance. The other thing, going back to when it comes to deductibles, and one example, let's say you just got a new job. They're offering you PPO, HMO, high deductible health plan. What do we choose and why? Most of the time, when we're having conversations with clients, I wouldn't say a lot of the time, they have no idea.
Right.
None. What is the pros and cons of each? What should I do? Why? And that is a huge decision there when we're talking about, should I pay less on a monthly basis and run the risk of having the higher deductible because I have the cash, or should I don't want to think about it. I want a really low deductible. I just want the insurance to cover it. And is that the smart financial answer or not? Right. So those are big discussions.
Yeah. And again, it's one of those things where you're offered something, you just quickly sign off on it. And you haven't really thought through the consequences where spending 30 minutes talking about it with someone who might be able to provide some insight.
It makes a massive difference. And a huge part of that decision too is, how often are you needing health insurance? So we have some clients that have physical ailments that are consistent and regular. And so for an individual like that, they know they're going to meet their deductible every year. They're better off just meeting that deductible, choosing the more expensive monthly premium, because in the long term, for most plans, they'll save money. But then you have individuals who, this is just in case I'm in an accident, I end up in the hospital, I don't have any real issues, maybe they're young and they just have nothing wrong with their health, and that's when that high deductible plan can make a lot of sense. So it's very specialized, and with the complexity nowadays in company benefits and then what you would have to go buy in the market for a business owner, there's a lot of peace of mind that comes with just having a good understanding of that part.
Right. If you're just joining us, we're with Jonathan and Drew, good friends of this radio ministry. They're also KELP Radio Impact Partners. You can find a link to their site at KELPradio.com. If you scroll down to the Impact Partner section, TRUVIZE.com. The phone number is 915-502-0096 for Truvize Financial Planning. We're going to get more into this conversation with Drew and Jonathan. But first, this is your daily reminder that 915 Talk is a production of Desert Voice Media and is listener supported. We have these conversations each and every day as we learn to love our city, love our neighbor, give God all the glory. Or in the case of financial planning, we're learning to steward the resources that we believe our Creator has given us so that we can serve our families better, serve our community better, bring God glory ultimately. And so as we kind of get into the weeds, so to speak, talking about insurance, it really is a lot of money, and it is a way for us to be better stewards, and hopefully as some money's freed up, or as we have that peace of mind, we can be better neighbors ourselves and serve our community better. So thank you to everyone who listens, who joins us in these daily conversations as we're kind of on this educational journey. I love nerding out about things like insurance and just even reminding myself to go back and shop around some more. We're going to go into a break. We're going to test our new automation system, right, Mac Daddy? We'll see if the break works. And then we'll get back talking more about insurance with Jonathan Drew of Truvize. Do not touch that dial.
We'll be right back. Don't touch that dial.
You have been listening to 915 Talk.
testify.
Probably 2011, I was going through a really rough patch in my life at that point for like 2 years. And at that point, I was out living on my own. Even though I was married, we were separated for like 2 years, just me and the dog. It's kind of funny sometimes when you're off by yourself and you realize just me and the dog, nobody else to turn to. You start turning to the Lord. I messed up here. How do I fix this? Through trying to find some hope in the situation at that point that seemed hopeless. And it's especially the parts that I waited patiently for the Lord. Like I told you earlier, I think you could take the patiently out of there. I waited. I was not always patient, but the Lord works on His time, not on mine. And He did. He brought me up out of the pit of destruction and out of the miry clay, which He did. He brought me up out of a lot of stuff, got a life turned back around, saved a lot of things in my life besides just me. I'm Keith Terrell, and if Jesus did this for me, He can do the same thing for you.
And they overcame him by the blood of the Lamb
And by the word of their testimony.
desertvoice.media.
Important announcement. You can now feed your mind, feed your soul with the KELP radio app. Listen to your favorite Christian teaching and talk programs on your smartphone from anywhere in the world with the KELP radio app. You can download the app on your app store now.
We'll be right back. Don't touch that dial.
And we are back. I'm glad you did not touch that dial. You're listening to 915 Talk. I'm your host, Andy Franca. Today we're with Truvize Financial Planning. Jonathan and Drew, Truvize.com, Truvize. We're talking about insurance today. And as we were in the break, we were talking just a little bit about disability insurance and life insurance. And I'm just going to say about life insurance, there's that big, famous financial guy on the radio, and he has a lot to say about life insurance. And I often myself forget which one he says is good and which one's bad.
Sure.
I don't know like what your opinion is on this, but it is an interesting thing. I went shopping for life insurance myself. And it was interesting because there's all these options that come in, and it was like funny when I looked at the payment table. It's like, if you want to continue having this insurance, you can continue to have it when you're 85 years old, and it'll be $180,000. So what do we need to know?
Yeah, this particular topic you could spend forever on because it's a huge debate from many financial advisors, insurance salesmen, etc. The guy you're talking about is 100% for term only.
Okay.
No whole life, no permanent life. And I think, again, going back to, you could rustle some feathers with some of the conversations, but it's what we believe. Most of the time, term is the right way to go.
Okay.
Most of the time. It doesn't mean that there isn't a time that a permanent policy could make sense, but we believe that it is oversold.
So just so I get the terms correct, permanent is the same as whole?
Whole is a type of permanent.
Okay.
Yes.
Yeah, so let's break it down. So like term life insurance is what it sounds like. It's life insurance coverage for a term of time. So usually the most common is like 20-year term, right?
Okay.
So that means that you go to underwriting, right? You answer all those questions. They do an analysis. Maybe they look at your medical records.
Right. They ask if you smoke or...
Yes, that's a big one, yeah.
Skydive.
Exactly.
Are you planning any trips to North Korea?
That's exactly right. That would be an automatic decline. And once you get through underwriting, they'll assign you a rating, and then you have a cost. So if you have $1 million 20-year term policy, that would cost X amount of dollars, and that cost is locked in for that term, 10, 15, 20, you can even get up to 30-year term. So that's how term insurance works. But after that term, what's going to happen is that those rates are no longer locked in, and they can get very expensive very quickly. Okay, so that's term life insurance. Permanent life insurance is different in that it has an insurance component to it, but then also as you pay into that policy, there's a savings component to it. So some of what you pay every month goes into an account and it's saved. Now, there are all kinds of, and sometimes whole life gets generalized as the other type of insurance other than term, but in fact, permanent life insurance has different subcategories, and those subcategories would include whole life insurance, universal life insurance. Those are the two, and then there's subcategories off of that.
Wow. Okay.
But the only thing that we need to really understand is that it has that cost for how much the coverage is on the permanent life insurance has some sort of savings component added to it. And that savings component and how that works and how it performs will depend on which type of policy you buy. Okay. So some of them even have investments that you can attach to them, and they that are similar to like mutual funds and some of the other things we've discussed before. And some of them just pay a fixed rate of interest. So it's a whole big world of options. But the conversation and the controversy is always between which one do I need? Do I need term life insurance or do I need permanent life insurance?
And I would also say some of the controversy is some of the biggest life insurance companies in the world, and names you would recognize very quickly. Every new salesperson, every seasoned salesperson is highly, highly, highly incentivized to sell the permanent type. Commissions are very high.
Right.
It is where you make your business for many people.
So what I'm hearing you say is very often those folks might be pushing whole life insurance on folks that it might not be.
That's where we say we believe that it's oversold. That there are many situations where that is not the best thing for that particular situation, but it was sold for other reasons. Now, does it end up being, it's just like taking your money and throwing it in the trash? No, there's still benefits to it, and you could still have somebody that, you know what, I bought a permanent policy 20 years ago, shouldn't have done that now that I look back, but I had insurance all this time, I now have cash value. It ended up that, hey, you know what, it wasn't the most efficient, it wasn't the best choice, but it also wasn't an awful, terrible choice either, right? So it's part of where we're saying that there's some gray area in it, but most of the time, when we're talking about, give you an example, when you're talking about, let's say, a 30-year-old healthy male that can get $1 million of 20-year term insurance and be paying $30 a month,
maybe
compared to many times, a good example would be, let's say you're a business owner or a doctor or an attorney or some of these other very highly compensated individuals. That person, that 30-year-old, is going to be a very high-value target for many of the insurance people of saying, hey, you should be putting $20,000-$30,000 a year, sometimes that much a month, into this saving vehicle for all of these reasons. And that's where a huge part of the controversy comes in, is should that person use that as the investment vehicle or other investment vehicles and treat insurance as what it is, which is insurance. And that's where you could really go into some major arguments. And there are arguments for both sides.
Right.
I told you what we believe, but go ahead.
No, I was just going to say, here's where we stand on that, just to be super clear, is that box is usually the last box you check. If you're in a tax situation where you have tons of income and you're looking to leverage a life insurance policy, there are a ton of other things that can be done first.
That we've talked about on the show.
Yeah, we've talked about on the show.
401ks and Roth IRAs and all these other they're buckets that we call them to be filling. And once you've filled all the buckets, because I just have so much extra money
then
to be
maybe
saving, then maybe you have that
do
conversation.
Gotcha.
Not hey, I just graduated, started my first salary position, and I'm going to start putting $500 a month into a whole life policy. Those are situations that we're talking about.
Right, gotcha. All right, and if you are just joining us, we're with Drew and Jonathan of Truvize Financial Planning. They're right here in El Paso. I do want to ask you how to calculate how much your life insurance policy payment should be. But first, we do have Charlie 1 on the phone. Charlie 1, what are you seeing out on the roads this afternoon?
A few spots right now, especially what I want to get to is the congested spots, a lot of closures going on. But first, to the crashes. On the west side, North Desert and Mesa, we have a crash again. That's North Desert and Mesa. We have PD activity there. They're asking for a tow truck. Then we have Mesa and Rester here. Lane closures go on here. Construction area on a busy intersection, Mesa and Rester. So there will be some tie-up congestion in this area, Mesa and Rester. Now let's go out to the east side, Montana East and Saul Kleinfield. All lanes closed. Construction site again, Montana East and Saul Kleinfield. Let's go to the valley for a second. Warwick and Palma Sola. Here we have in the valley a crash. Now, what just happened, but with injury, PD Fire Department headed out there to Warwick. So extra caution there and drive safely this afternoon. And Andy, back to you.
Charlie 1, today we have Jonathan and Drew of Truvize Financial Planning. We're talking about all the things it takes to invest correctly, but I know one of the line items that they would probably recommend for most of their clients' budgets is a monthly Menudo budget. And when their clients are looking to spend that Menudo money, where would you recommend they go?
It's not, and it's not expensive. They can go to Mi Favorito Cafe, 3120 Traywood, the bowl of menudo right there. And you can choose two sizes, medium or a large bowl, depending on your appetite. But delicious. And then it's open at 7 o'clock in the morning. You don't have to stand in a line or wait or anything like that. It's pretty much fast to serve it, and you can just enjoy it. That's at 3120 Traywood, open tomorrow at 7 o'clock, Andy.
Thank you, Charlie 1. We'll talk soon.
Thank you.
And we're back with Jonathan and Drew of Truvize. We're talking about all things insurance, and I forgot to say this at the beginning of the program. If you are listening and you have a question for Jonathan and Drew about insurance or investment or anything, you can give us a call at the station. We'll put you on the air. We'll hear what your question is. 915-779-0016. But before we went into the traffic break, I asked the $1 million question. So if I'm looking at life insurance, how do I calculate what's the right word? The premium?
Well, premium or the amount of coverage you need?
No, the payment. That one.
Coverage
the premium
amount,
is the monthly amount I pay, right?
Yes.
Yeah, I'm learning just every day a little bit. The payout.
Yeah, so if you're talking about the total coverage, so what happens in the event that you pass away unexpectedly, that's called the face amount. That's the technical term, or coverage amount. You can call it whatever you want, really.
Yeah.
You know what's really interesting about this is, if you were to come in and have a financial plan done by us, we're going to take a good look at all of your assets, your liabilities, how dependent others are on your income, et cetera, that sort. And we'll run a calculation, and then we'll make a recommendation as to how much coverage you need. But if you're not having a financial plan done for us, there are a ton of life insurance calculators on the internet. Be careful with the ones that may want you to enter in your personal information, because you might get bombarded afterwards.
Yeah.
But you can
For
find
sure
a
you
ton
will.
of free, yes. You can find a ton of free life insurance calculations, and you're really just looking for one that is taking into consideration how much money you make, what if you have anybody that's dependent on your income, and what does your assets and liabilities, like what you own and what you owe, and your age and your date of birth, and then they'll usually give you a pretty good number that you can rely on in order for you to go out then and find out which insurance product you should buy at what amount. So.
All right, so I didn't get a very concrete answer there.
Or you can just do 15 times your income.
Yeah, there you go.
So 15.
Well,
Again,
It
there's a lot
depends.
that goes into it, right? And then there's different types of calculators. There's human life value. There's 10x to 15x.
Yes.
There's a lot of different ways.
Yeah.
That's why I think Drew gave the right answer of there's great calculators online that'll give you a good range. You don't need to. You should maybe, we've talked about before of who needs financial planning. I think everybody needs to sit down and go through. Doesn't mean you have to have an ongoing planner, but if you can have a professional talk with you about your situation, even if it's a one-time thing, and have somebody walk this through with you, that'd be great. If you're not going to do that, then there are plenty online where you can say, how much life insurance do I need? Free calculator. And they'll use one of those human life value or 10x or 15x income.
Yeah.
Drew, spitting out the 15x income, well, depends on how old you are, how old your kids are, all of that. But
if they're able to take care of themselves.
If you were just going to choose just one, I agree, just 15x annual income.
Yeah, it's interesting because I feel like, I don't know, 20 years ago, I saw that, your family needs to be able to survive without your income for 3 years. And then I was like, well, that seems like a lot. And then when I was looking and then I was, a couple of years ago, I was kind of revisiting the question, and the number I heard was 9. 9 times. And then you're saying 15. And I think that is helpful to bear in mind that it's probably a lot more than what you're thinking.
That is great. Yes.
Absolutely. And the other thing to consider too is what type of lifestyle you would want for your family in the event you passed away. If you are thinking, look, if I pass away, my wife is going to get a full-time job and my kids are now going to get taken care of every day by my mother-in-law, and I just want enough to be able to pay off the house, and then she can cover it from there.
Right.
That's a much lower number than I would like everything to stay exactly as it is. And the same way we were planning to be paying for our kids' college and paying for our retirement, I want all of that to continue as well.
Right.
That's a much larger number, right?
Yeah.
So it is also specific to your individual situation and what you're looking to do. The point of what we're talking about is, especially as you're younger and looking at this as early as you can, you could get that higher end number for a relatively low monthly cost.
Yeah.
And so it doesn't mean that you should be freaked out of saying, well, gosh, I did the math and that's whatever, $3 million. Well, again, a younger person, relatively healthy, shop around, you could get really good coverage for really low amounts, and that will make it to where nothing would change for your family if you passed away. But
Right.
it is also individual.
Well, except for you wouldn't be there.
Exactly.
Right, financially.
Financially. Yes.
We always say financially.
And again, I think this is really important and useful to talk about, to be serious, because I think going back to my story of hearing 3 times your annual income, and to me that seems like so much money.
Right.
But when you sit down with someone or even work it out on a piece of paper, really what the expenses are, for the next 15 years, your family is going to need a lot more than 3 years of your income.
Absolutely.
Especially if you have young kids in the house.
Yeah.
A lot of times your life insurance need is much higher when you have young children or children in the house.
Yeah.
So, for instance, I'll give you a quick example for people to take. Is if you are both working and you're living off of your income and the household consumes that income and you've got, a 5-year-old kid, go out, get 15 times your income for 15-year term policy, right? That's a real basic advice on how to handle that, because while the kids are at home, you're going to need more coverage. It becomes a much more survivable situation when there aren't children in the home. So those are the things you're wanting to consider. So.
Yeah, it's one of those conversations that I've learned a lot of people don't want to have because it can seem morbid or dark, but it is absolutely important to have those conversations. And like I often say on this program, I'm not afraid to ask stupid questions or to admit the stupid questions I had in the past. Like what we're talking about is really replacing an income.
Yes.
Yeah.
And the first time I went out to get life insurance, I was surprised that my kids didn't get life insurance. Except for in the very, awful event, if one of them was to pass, it would cover like funeral expenses. I was expecting a payout, or some kind of coverage for that, but that's not really a thing. It's you have a breadwinner in the family, possibly 2, and maybe more, whatever the case may be, but for their income to be taken care of if, God forbid, something were to happen to
Yes,
them.
it's why we say if someone is dependent on your income,
Right.
there is a need there.
Right.
Plus, segueing
that.
into another insurance conversation is part of the reason why term life insurance is relatively cheap is because the chances of, again, going back, a 30-year-old dying between 30 and 50 are very low. It's usually an accident. It's usually something that came up that, wasn't seen.
Yeah.
It's like 2%. I don't know if you ever saw that. It's like really low. So
Yeah.
So that's why it's low cost. The
But it
insurance
happens.
sure,
But it does
yes.
Yeah.
So it's why go ahead and spend the money to cover it just in case, but it'll be relatively low cost, and even the insurance company knows that. That's why it's so low cost.
Right.
The thing that is more expensive, but there's a reason for that, is segueing into, for instance, disability coverage.
yes.
People think sometimes of disability as, broke my back and I end up in a wheelchair for the rest of my life.
Yeah.
And sure, that absolutely, yes. But there are also many other types of, for instance, traumatic brain injury. Somebody fell a weird way, hit their head, and now they're never the same. And they could never do what they were doing before at the same level.
Right.
Or many other types of, we're talking about the difference between mortality and morbidity, and the chances of those things happening to a 30-year-old are much higher, and there's many years for that to happen than life insurance. So that is another area where both through coverage through work, or if you own your own business, coverage outside, we absolutely talk to clients about we need to look at this and weigh the cost-benefit analysis of how much it costs versus the risk that you'd be willing to take, because that is a huge blind spot that many people miss.
Right.
And the statistic is crazy. If you go to disability.gov, if you're a 25-year-old, you have a 1 in 4 chance in your lifetime of having a long-term disability before retirement. And what that means is that you are out of work for 90 or more days. 1 in 4. Obviously, as you get older, the risk goes down because you've lived more of your life. But 1 in 24. We talked about 2% for life insurance.
25.
Passing away unexpectedly and there being some sort of financially detrimental situation at home. What if you lost your income, right? And if at a 1 in 4 rate, it is the most overlooked, and long-term care too, but it's one of the most overlooked financial pillars of a plan is disability. So the challenge is how do you take care, like how do you handle it, whether that's through a group policy at work and maybe something you purchase outside of work on an individual basis. And that has to be navigated, but it should absolutely be on your radar, something you have to take care of, especially if you have a family is dependent on your income.
Yeah, and I think, this is just kind of an obvious thing, but one that we like to ignore is just this thought when we talk about life insurance, disability insurance. We know in our mind that these kind of things do happen to people, sadly, but we think they happen to other people.
They happen to other people.
And so I had to really force myself to even agree to fork out that money every month because that kind of thing's not going to happen, but
Jonathan and I can tell you stories. We have clients who are young, in their 30s, healthy people, major heart attack, was brought back to life a couple of times. It was in not only a life insurance situation potentially, but then a disability insurance situation. Like you never know. And this is the general idea behind insurance, is that if there is a chance that something happens or could happen to you and there is a large financial impact, you should be looking to insure that risk. That's why we have health insurance. That's why we have auto insurance. It's why we have disability, life insurance, long-term care. Because even though the likelihood may not be very great, it's what is the financial impact on you if it does happen. And that's when you buy a policy for that risk. So.
Right. If you're just joining us, we're with Jonathan and Drew of Truvize Financial Planning. It's TRUVIZE.com for Truvize Financial Planning. They do have a phone number. It's 915-502-0096. And this is the point in our program where we often thank KELP Radio's impact partners. You can go to KELPradio.com, scroll down, check out the impact partners. Those are local businesses, nonprofits, churches, et cetera, that have joined this radio station in its journey to serve our community. And today we want to just give a shout out to Truvize Financial Planning. I really appreciate you guys and joining this radio station and what we're doing. And if someone's listening and you're interested in becoming a KELP Radio Impact Partner, just like Truvize, you can reach out to us through the website or by giving us a call at the station. We'd love to talk with you about what that could look like as we together look to serve our community better. We're going to go into a break. Do not touch that dial.
Back. Don't touch that dial.
Greetings, KELP listeners. This is Terry Gray, pastor of Calvary Chapel, Sun City, and speaker on the Summons broadcast heard each weekday at 5 p.m. right here on this station. Calvary Chapel, Sun City is located at 960 West Borderland Road on the west side of El Paso. We hold services on Wednesday evenings at 7 and on Sunday mornings at 9 and 11. If you are without a church home, we would love to have you join us for worship and Bible study. You can find out more information about us on the web at www.ccsuncity.org. Greetings, KELP listeners. My name is Terry Gray, and I have the joy and privilege of serving as the pastor of Calvary Chapel, Sun City, located on the west side of El Paso. I also have the joy of connecting with the radio audience in the borderland through the Summons broadcast heard each weekday at 5 p.m. right here on this station. On Summons, we study the Bible book by book, chapter by chapter, verse by verse, precept by precept. Please join us each weekday at 5 p.m. for Summons right here on KELP.
We're back. You're listening to 915 Talk.
We are back, and you're listening to 915 Talk. Today we have Jonathan and Drew of Truvize Financial Planning with us, truvize.com. It is fun to have these conversations. Like I said earlier on in the program, in previous conversations we've talked about financial investment, all those things, but insurance is right in the mix to having a healthy financial situation, both as a family or as a business. So we've talked about life, we've talked about disability. What else have we already talked about?
Check the health insurance,
health
auto,
insurance.
home insurance.
Yeah, right. We talked about shopping around.
Yes.
Yes, huge.
So all these things can happen. Our regular listeners know that I lived in Russia for many years. I'm going to give you a fun fact.
Okay.
The word for insurance in Russian is strachovka, and the root word is literally fear.
Gotta love the Russians.
I think the English word is much better. As we're talking about these heavy things today, I don't want to give you this idea of strachovka, this idea of fear, but it is a matter of taking care of our families, thinking wisely, and really looking for the best situation rather than just quickly pulling something up online and signing the paperwork.
Yeah. Definitely. And one other thing we'll talk about on the disability side that isn't just about fear, but could also be a good business idea for especially business owners that have really high performing employees.
Okay.
That it's like, man, if this guy or girl ever was out of work for 6 months, I'm in big trouble.
Right.
Because who's going to pull that weight?
Yeah.
Yes.
There's key person policies that a business can buy on a very key employee.
Yeah, key person.
That can actually pay some of that revenue that the key person was bringing in for that specific time period.
Right.
So there's a lot of ways that you can...
do you tell the team who the key person is and who the key person wasn't?
Yeah. Oh, yeah, good question, right? They have a policy on them, you don't. But yes, truthfully, it's an area that not just on the personal side, but on the business side is a lot of times just a blind spot for people. Right. But when it happens, it's one of those things of hindsight being 20/20. Man, if I would have just done that back then, what a difference it would have made.
Right.
And you can protect the key person, that situation in life. So something if they pass away unexpectedly, but also with disability. So if they become disabled, so the business receives a payout so that they can go out and maybe hire a replacement, or they have some sort of time involved and they have the capital available to be able to handle the situation. Because it's not a good situation. We don't ever want to see those things happen, but there, especially with small businesses, there are, almost every small business we work with, there are people in those companies that are carrying a ton of weight and have a tremendous impact on the bottom line. And so you want to make sure you're protected in that situation.
Yeah, absolutely. Yeah. So key person?
Key man, key person. Key person's probably the modern
right
terminology.
Right. Insurance, that's such a good point, and for us to be reminded of. We talked about health insurance. We talked about disability. We talked about life insurance. What if I'm like a long-term disability, even bedridden for not 90 days is the example we gave, which would be difficult enough, but a really long-term situation?
Well, a good long-term disability policy would cover many, many years. We usually would recommend up to when Social Security disability kicks in.
Oh, wow. Okay.
So it could be, you could have a really terrible disability and you're 28 and it covers you and pays a payment till you're 67, right? So that is covered under that long-term disability. One that we haven't talked about is similar name, but is long-term care insurance.
Long-term care. Okay.
And that's when we're talking about parents, grandparents. Right now, this is a huge market.
Yes.
Because you have the baby boomer generation that has been having to care for their parents and not wanting to put them in a home. So they have them still in their home, and it's a huge financial burden on them. You might have skilled nursing that they may need to hire. It's now taking most or all of any money or inheritance that that previous generation had, all paying for this coverage, for this cost. So now long-term care insurance has become a huge policy that should be looked at. But also because of the fact that it's being used more and more, because of the fact that baby boomers are living longer and longer, it's also very expensive.
Right. So it in this scenario, is it often the adult children who buy it for their parents?
No, here's a typical scenario is that they've gone through that with their parents, and so now they want to prevent that from happening to their children.
Themselves.
Yes.
Yeah.
And the issue here is that Medicare does not cover long-term care. They will cover a portion for a period of time.
Oh, interesting.
But it's only a few months usually. And Medicaid only kicks in if you have like less than $2,000 of assets.
You're destitute.
Very low. You're completely destitute. There's some planning that can be done in those situations to try and help mitigate those risks but if you're in a situation where you have decent retirement income coming in, you have IRAs, you have old 401ks that you've saved up, you're living off that, you're not going to get any help from anywhere.
Yeah, I think what I heard about this is that if you end up in a long-term care situation and you're elderly, you either want to be absolutely destitute or filthy rich.
Exactly.
And if you're anywhere in the middle, it's going to wipe you out.
Exactly.
That's exactly right. And so the third option I would say there in the middle is buy a long-term care insurance policy if you can afford it.
Yes.
So.
Yeah.
And in the past, it used to be very much like any other insurance policy. It was what's the benefit amount. Okay, you pick a benefit amount, you pick a time period, and then there's a monthly premium, and you pay that monthly premium forever. What started to happen is those monthly premiums started to have automatic increases that were getting ridiculous.
Well, as
And
you get
getting
older,
to-
the chances of needing long-term care increases.
Not just that, but the insurance companies realizing, holy smokes, we priced this wrong. There's a lot more of this group of people needing this than we thought.
Yeah.
So what has happened in these past few years is these big insurance companies and life insurance companies have found a loophole way around this to sell hybrid type policies that are life insurance policies with long-term care or annuities with long-term care that helps bring that total cost down to where somebody can, for instance, say if they have X amount total in retirement dollars to use, they can earmark a percentage of that amount and say, look, this is an amount I'm going to set aside for long-term care. If it ever happens that I need it, I'll get multiple of that as a benefit. If it ever happens that I don't need it, my kids will just get that amount back. Right. And so there's a lot of ways that it can be done now where it's not just, hey, sorry, I mean, it's $1,300 a month and it's going to go up for it. It can be done in a way that makes sense for you financially, but also kind of eases the pain of an insurance cost.
Right. And I feel like this conversation could be a whole hour conversation for when Jonathan and Drew of Truvize Financial Planning come in again to 915 Talk. But part of it is protecting your assets if you end up in a long-term care situation.
Yes.
That's a really, really big deal that I've unfortunately learned a little bit about in my lifetime. Wow, we only have a couple minutes left. We've gone over quite a bit over the past hour. So let's try to, what did we learn about? Auto, home, life, disability, long-term care, key man insurance if you own a business.
General liability.
Yes, there you go. And in the middle of all this, it's get advice.
Yes.
Absolutely. It's this entire world and this large piece of your financial picture and future should be given the attention that it deserves.
Right.
You really need to look at it. You really need to study it, and you should revisit it on an ongoing basis. Because if not, you're leaving money on the table.
Yeah.
And you're also exposing yourself in ways that maybe you don't even realize now.
Exactly.
And this is probably, I wouldn't say this is probably about any other component of your financial plan. be very, very cautious and careful who you choose to do business with in this world.
Yeah.
It is one that is convoluted and confusing and easy to be misled. And
Preach it.
I'm just saying.
Yeah, you're right.
Let me
you're
get
right.
no, I'm
Yeah,
just
yeah.
kidding. But
No,
this
you're
is
right.
the one area that you need to make sure that you are using a vetted professional with a good reputation, and to spend some time getting yourself educated as well, so you can make a really good decision, because you can spend a lot more than you need to, or maybe be in something that's not as effective as it should be, and just be really mindful of that.
Yep.
Well, Jonathan and Drew, always a pleasure to have you in. Jonathan and Drew of Truvize Financial Planning, TRUVIZE.com, 915-502-0096. I know that the two of you, I always say this, whenever I see the two of you, you're always like super excited to nerd out about money. But it is exciting and fun to see two guys who really care about what you do. I know it's not just a job for you, but it really is a passion, and you're using that passion to serve the community around you. So really appreciate that. Truvize.com. And like we said earlier, we're on this educational journey on 915 Talk. I do hope that this conversation has inspired our listeners to, if nothing else, shop around.
Yes.
Yeah.
Get some advice. Talk to some people. You can always reach out to Truvize. But don't be afraid to get some outside eyes on your situation. Be humble enough to ask for help, and in doing so, we can steward our finances better and serve our community better. As we always say, let's learn to love our city, love our neighbors, and give God all the glory. This has been 915 Talk. You have been listening to 915 Talk, a production of Desert Voice Media. In order to listen to previous editions of 915 Talk, just visit desertvoice.media. Let's learn together to love our city, love our neighbors, and give God all the glory.